Can I claim my mortgage as an allowable expense? Hi, I'm Kimberly Shapcotts, qualified chartered accountant, property investor and entrepreneur. Let's sit down and have a chat. There are a lot of misconceptions around interest payments and mortgage payments now with the changes with Section 24. So the question I wanted to pose today was, can you claim your mortgage payments as an allowable expense? And the answer to this is yes and no. And the reason it's yes and no is mainly because it depends what type of mortgage payment you are making. If you're making an interest-only payment, then there is an allowable expense. It just works in a slightly different way. If you're making a repayment payment each month, then the answer is yes and no. Because yes, you can make a claim for some of the expense, but no, you cannot for all of it. And the main thing here is you can claim for the interest element of your mortgage payments. Now, this would normally be on your mortgage statement each year and show how much interest you've been paying for the period. So in effect, what you can claim on your mortgage payments is the interest element of your mortgage. So as we've said, if it's an interest-only mortgage, it's going to be all of it. If it's a repayment mortgage, it's only the interest element, which you'll need to get off your mortgage statement each year. Now, unfortunately, mortgage statements don't always come at the right date, i.e. the 5th of April, because let's be honest, not most of us do not get a mortgage on that day when we get a mortgage. They come at different periods in the year. So therefore, you'll need to have a look at your mortgage statement from different periods to include the appropriate proportion from each of the figures on your different mortgage statements. If they don't arrive in time, you can request them from your mortgage provider, or an appropriate apportionment would be okay, and you can just then adjust it in the following year to make sure that you are including the right sort of figure. Ideally, your mortgage payments, if you're in a company, will go through your company bank account, so it makes it all very clear. If you're in your own name, then again, just make sure, I would suggest you have a separate bank account so that everything is going out one bank account to make it really easy for you to see exactly what expenses you are incurring on that property. In terms of evidence, there's very little evidence you necessarily need on this because you'll have your mortgage offer, you'll have the mortgage payments going through your bank, you'll have your mortgage statements. That is basically the only evidence you will need for HM Revenue and Customs to be able to see what you are claiming. If you do an apportionment, you just need to show your apportionment calculation. So if they do come and ask any questions, you've got the evidence to show exactly what you have been claiming. So how does it actually work? Well, in a company, you'll just claim the interest element as an allowable expense. No issues, it just all goes through. The slight change is anyone who has any properties in their own name and you're claiming mortgage interest on that side of things. And big change was Section 24. Now, there is a full video on Section 24 on interest rate relief on the channel, so check out that video, which will take you through the whole process and how it fits together. In brief, what has changed is historically you would have your rental income and your expenses, and then you get your rental profits, and those rental expenses would include your mortgage interest. Since Section 24 and the change in the interest rate relief, this has now disappeared. So your rental profits are now your rental income less your rental expenses excluding your mortgage interest to give you rental profits. Now this is where the confusion has occurred, that people now think you cannot claim your mortgage interest, which is definitely a myth. However, it has changed how we do it. The next step with those rental profits is now we calculate how much tax we are due. So you may be a basic rate taxpayer, you may be a higher rate taxpayer, but you will calculate how much tax is owed. At this point now, you will now look at your mortgage interest. So if we say we've got £1,000, we've now got £1,000 of expenses to claim. But we're not claiming the expense. What we are going to be claiming is this interest rate relief, which is 20% of your interest. So for £1,000, we'd be getting £200 off our tax liability to give us how much tax we're actually going to pay. For a lot of people who are basic rate taxpayers, there's not really been too much change in the tax that you pay. However, your income is now showing as a higher figure. If you're a high rate taxpayer or your income was just under the high rate tax threshold, you may now have become a high rate taxpayer. So now you are not necessarily getting the same tax relief that you were getting as you would have been getting before. But you can still claim 20% of that interest. So it's still worth claiming, and there is still a deduction that you can make. For a full example, check out the video on the channel, but hopefully that gives you an idea of what is happening. And yes, you can be claiming your mortgage interest. You can't claim your repayments on the capital, but you can definitely be claiming the interest on your mortgage. So make sure you're putting your mortgage interest claim on your tax returns. Hopefully today you've discovered what you can be claiming in regards to your mortgage. If you have any questions, then please do leave a comment. Please like the video and do subscribe to the channel. And let's make tax less taxing.